Well, there's definitely no shortage in international trends to look out for in 2025. There's several domestic happenings in South Africa that we will also be tracking. And this is today's Markets Magnified podcast. And to chat about it, I am joined by Director of Econometrix, Dr. Azar Jammine. Azar, thank you very much for joining me today. And just I also managed to catch the first flu of 2025. So if my voice starts croaking, that is the reason why. But heading into 2025, I mean, just a jump back to where we were last year. We were looking towards the elections happening. No one knew exactly how that was going to play out. We ended up with the GNU. We ended up with no load shedding. I mean, I can't remember the last time we entered into a new year without load shedding. So my question is, did South Africa kind of use 2024 to set ourselves up for possibly a more positive 2025?
Looking back at the situation, it is possible, and most of us are hoping that 2024 will mark a turning point in the declining economic performance of South Africa of the past 15 years. Especially since about 2013, South Africa's economic growth declined to an average rate of less than 1% per annum. And a lot of that was attributable to state capture and its impact also on the underperformance of state-owned enterprises. And one of the key areas here was energy, and especially Eskom, and the gradual increase in the rate of load shedding through the latter part of the last decade and into the early part of the 20s. And certainly at the beginning of 2023, we were faced with very severe load shedding, often at stage 6, and the prospect of a very dismal economic growth as a result of electricity just being unavailable. So when we suddenly found from the 26th of March onwards that there was no load shedding, this came as an incredible surprise to many people. And the expectation was that without load shedding, the country's economic performance was bound to see a marked improvement. The second point that you alluded to is, of course, the general election on 29th May. And the run-up to that was, of course, filled with apprehension and nervousness about the possibility of possibly unrest during the elections and of a populist takeover of South Africa's government, especially by the likes of the EFF. What emerged, of course, was that the EFF was not the main populist party. In fact, it was more the MK that suddenly appeared out of virtually nowhere to become the third most popular political party amongst those who voted. And I emphasize amongst those who voted because when you look at how many people voted, you're talking 16 million. It's really a fraction of the country's population. But anyway, that's what counts in terms of government. And so it came as another pleasant surprise when we saw the formation of the Government of National Unity, which incorporated 10 political parties, but in particular saw a tie-up between the ANC and the DA to try and govern the country, and awarding various ministries to different political parties, with the Democratic Alliance actually inheriting some quite important portfolios such as education, home affairs, and the like. And as a consequence, we suddenly, the international environment seemed to take this very positively and foresee the possibility of a turnaround in South Africa's economic fortunes. The most important element of this Government of National Unity, and one mustn't forget it, well, there are two important ones. The one is that there is an oversight of each other's activities by the member parties, and theoretically that should contribute towards a reduction in the level of corruption and state capture. And we've seen some very positive moves in that regard. The second very positive aspect is that it has ushered in an era of increased cooperation between the government and the private sector to try and resolve South Africa's economic problems. So those are two very positive factors. The disappointment is that notwithstanding no load shedding and an improved government environment, we have not really seen any marked pickup in economic growth. In fact, the third quarter disappointed everyone with negative growth after two consecutive quarters of positive growth. And the forecasts are currently that the South African economy will grow somewhere around 0.7, 0.8, 0.9% for 2024, will have grown by that. We're waiting for the fourth quarter GDP figures. In particular, what has been disappointing has been the lack of any marked improvement in the productive side of the economy. And what one means by the productive side, the heartland, especially mining and manufacturing, but also construction and agriculture. On the contrary, agriculture actually exerted a fairly heavily negative impact on third quarter figures. The hope is currently that it's only a matter of time before we start seeing a turnaround and an improvement. Allied to that, we have not seen any marked improvement in the level of capital investment in the economy. And bearing in mind that the decline in capital investment had been at the heart of the underperformance of the South African economy through the past decade, that has been a source of concern. The third quarter did see marginal growth in fixed capital formation, but really nothing to write home about. So again, we are hoping that things might improve. What encourages one to think that they might improve is that the various business confidence and consumer confidence surveys are all a lot more positive than they were prior to the advent of the GNU. Even still today, one of the headlines in Business Day is that there is quite a lot of confidence. Survey by Saki finds optimistic outlook on business. And we saw we've been seeing with the release of the ABSA Purchasing Managers Indices, the actual number has been quite negative and below 50, which points to contraction in manufacturing. But the expected business conditions in 6 months' time is way over 60, closer to 70. So that's the kind of situation that the dichotomy that we are finding right now. We're not seeing a massive improvement in business activity, but there is quite a lot of confidence that things will improve. The one area where there has been concrete evidence of improvement in economic growth has been on the consumer side. October and November saw a nice uptick in the growth of retail sales and in the growth of passenger vehicle sales. And although in the case of passenger vehicle sales, we got December figures which showed a slowdown in the growth, the point is it was still a significant 8% above a year earlier. So consumers seem to be taking the bait a little more actively, not on the back of increased credit, by the way. Household credit demand is still quite low, but more, I think, because of the benefits of lower inflation that has turned out to be significantly lower than we anticipated. And secondly, because of the allied start of the decline in the interest rate cycle. One should not get overly excited about this. Interest rates have fallen just 0.5%. From a level of 11.75% for prime to 11.25%. Still a very punitive interest rate, but somehow at the margin this has imbued greater confidence, and also the fact that with inflation having fallen to below 3%, there are expectations of further interest rate cuts. That is where there is a risk, of course, that they may not come through to the extent that we had been hoping for. We've got to wait to see. But the other additional factor that has proved positive on the consumption side was the introduction of the two-pot retirement scheme as from the beginning of September. And that has allowed people to access a portion of their pension funds either to retire debt or to go spending more. The evidence suggests it's been that money has been spent more on has been used more for spending purposes rather than for retirement of debt. But nonetheless, the consumer seems to have been in a slightly better situation. Now, you might find that a little weird because you keep hearing about people having to access debt to survive and all that. But again, I need to emphasize the irony of South Africa's economic situation, where you have the highest inequality of any country in the world. And that means that 85% of all spending is conducted by just 15% of the population, most of whom have formal sector jobs, have a decent income. And they are who really determine the level of economic activity in the economy. The remaining 85%, sadly, but realistically, contribute towards only 15% of what is spent in the economy. So that is really hardly has hardly a material impact directly on the state of the economy. And so what we are seeing right now is that it's the 15% or maybe slightly more people who have jobs, who belong to trade unions, who have pension funds, who are managing to survive reasonably well because of the fall in inflation and declining interest rates, and who are benefiting now from the allocation of some of their pension funds to help support spending.
You mentioned rightly that there's some, when we look at the surveys, there's definitely some confidence that got pumped into the South African economy. Yet there are still several risks, obviously, for this to translate into meaningful economic growth or development. I know particularly the logistical constraints in South Africa is still a headache for manufacturers, for the mining sector. But what are some of the other risk factors that you will look out for that could possibly puncture this confidence bubble we're in?
You have mentioned the logistical factor, and before going on to the other factors, the logistical factor is playing a very important role in subduing growth, and it has been exacerbated most recently by the unrest in Mozambique. This morning I heard that over December, the reduction in road traffic transporting goods through to Maputo had fallen by anywhere between 40 and 70%. Now, that's going to inflict damage on the country's, the performance of certainly the minerals sector, but some of the other sectors as well. What are the other constraints? One of the big ones, what is holding back infrastructural investment? And the answer is crime syndicates, mafia, who are intervening to make life extremely difficult the moment that one wants to embark upon infrastructural investment. So we're not seeing the pickup that would be desirable and which had been planned. The second point to make is that, especially even when you're dealing with the logistics, you have a situation where within the ANC, there is tremendous pushback still from some factions against the fact that the ANC has partnered with the DA in this government of national unity. And the moment that the government starts talking about getting the private sector involved in trying to resolve problems, you're seeing pushback from within the ANC itself. I know I mean, that the alliance and the GNU are being hotly opposed by MK and the EFF, obviously, and ATM. But that is not the main reason why we're not seeing progress. We're not seeing progress because even within the ANC, there is considerable contestation and opposition to getting private sector involvement, and they feel a lot of the members of the ANC are feeling that it's a sellout to the people who have been exploiting them for centuries. And that is holding back a lot of the progress that we might otherwise have seen. But more fundamentally, and even if we fixed logistics, I still think that we would find it difficult to really see a marked pickup in economic activity on the grounds of certain deep-seated structural problems that have their roots in apartheid, make no mistake about it, but we have not seen enough work being done to overcome those structural impediments. And those are I try to capture them in three main areas. The first is education, and in particular, the skills development in areas where the economy needs those skills. And it's not only in terms of maths and science, well, that is the most important one, which in a society where technological advances are taking hold at an exponential rate, you really need people with a high degree of competence in maths and science to actually cope with the situation. Secondly, in artisanal areas where manually we need mechanics, welders, carpenters, shop fitters, this kind of thing. And the population is not actually developing to try and satisfy that kind of a requirement. Secondly, the spatial inequalities, the fact that we still have people working far from where their homes are. This is creating huge costs of transport to and from work, and also inhibiting the ability of people who are unemployed to seek employment. I mean, the cost of travel to look for employment is prohibitive. And thirdly, linked to some extent to those spatial inequalities and the lack of public transport, by the way, is the lack of enough small business activity. If you go to many emerging markets, you'll see that a lot of the people are actively employed informally, doing their own thing, making up their own businesses, and not relying on big business to bail them out with jobs. In South Africa, unfortunately, there is far too much power still concentrated in the hands of government to begin with and state-owned enterprises, powerful trade unions who block the way of people to actually advance in small business in many respects, and who call for the imposition of huge amount of regulations. And thirdly, you have a situation where you've got big businesses that dominate. I mean, if you go to many emerging markets where you see relatively little unemployment, you won't see massive shopping centers. You'll see a lot of little shops, everyone doing his own bit and employing people around him. It's a structural problem that this country and its economy faces, inherited obviously from the apartheid era. But the government is, if anything, exacerbating this situation by imposing deep-seated regulations that make it far more difficult for small business to survive than for big business. And until such time as we really deal with those problems, I don't know that we can see the economy achieving growth rates of 6, 7, 8%, which are what are needed to try and remove unemployment and reduce inequality more generally. Obviously, there are other major constraints, and those are international. The performance of commodity prices is critical. And in recent years, we've seen a slowdown in the growth of the Chinese economy that has prevented the performance of commodity prices from being strong enough to really give a major boost. Although they haven't done too badly, but they're not giving the boost that we would really like to have seen in this economy. Those are, of course, the very big risks from externally now. With the Trump era, there's a lot of uncertainty, there's a lot of optimism, but there's also a lot of apprehension about what the Trump policies could bring about for the world economy.
Yeah, it's definitely going to be an interesting year. There's not going to be a dull moment in 2025, I think. But we will find out. I think the State of the Nation address is happening on the 6th of February. So we'll find out then how the GNU plans on steering South Africa for the next couple of years. And I know the budget will follow a couple of weeks later. And then, as I'm pretty sure, we're going to unpack all the tricky numbers and what government intends to do and where they're going to spend our tax money this time around. So until then, I hope you have a good time, and thank you very much for chatting to me.